how do we identify the market condition we're in? So you have 3, right? So yo, free course right here, chat. Drive. You have range. And then you have liquid. So these are your 3 cycles. Some people might say it's similar to this, similar to that. Yeah, it's probably all similar. It's just different ways of reading it, right? So like drive is like this. Drive is when you're just like, do you guys want to see the example in candles, or do you want to see it in arrows? Arrows or candles? Which one's easier? Candles? All right. So like when you're driving, this is what's happening. You're just driving. All right, you're just moving. When you're ranging, you're doing this. After a drive comes the range. So let me draw the drive and let me draw the range. Same thing. Just now you have some sort of range. All right, that's a range. So drive, range, liquidity. I can't copy and paste this. Nah, okay, that's cool. Yeah, I can't copy and paste it. That's cool. Then you have a range, liquidity. The liquidity will look something like this. So you have the drive. Then you have the range, which is this, right, chat? And then you have the range. Cool. Then you have a bearish candle. Then you have the bullish candle. All right, so that's the range. And then liquidity is now going to be then this. All right. That's gonna be liquidity. So what's the difference, Don? So like this right here, let's make drive pink, orange, range, liquidity. Let's make this blue. Oh, or green. All right, so drive is this. Drive is this. Range now is this. Range drive is this. Range now is this. Liquidity now is this. Right? So obviously this is drive, this is range, that's liquidity. So that's the 3 market cycles. To have a range, you have to drive. You have to drive. Every single time you see a range, you see a drive before a range. Every single time, no matter what happens, you have to. It's just price action. I'm not making it up. It's just what prints, right? And then after a range, then would have liquidity. So that's the order that it flows in majority of the time. I'll say almost every time. It would drive, it would form a range. After range, it forms liquidity to drive. So after liquidity, that's when the drive tends to happen. In this case, it would drive up like this, right? So if you can understand what type of cycle you're in right now, the higher time frame is in what cycle, chat? What cycle is the higher time frame right now? Like higher time frame. Higher time frame, not the lower time frame. The higher, like the daily, the weekly, the monthly. What are we doing? We're driving. Yeah, we're driving. Higher time frame is driving, right? So what's the lower time frame doing? The current, like what are we trading right now? Like what's happening right now on the 1 hour time frame? What is this? Oh shit. What a coincidence. Well. Look at what you have here. You have a drive. You now have a drive plus what? A range. What's next, chat? What's next to come? What do you need to confirm direction now? You need liquidity. So you have this. So like this is right here, chat. You have this, right? This is your drive. Right here. This is your range. Right here. What's next? Liquidity. So this is your support. This is your resistance. So whenever price comes down towards these ranges here, which is it likely would, once you see that, you would know what to do next. You would know, okay, so now I can delete this, chat. You guys don't need to see this no more, right? You guys know what that is? Cool. So what's next is liquidity, right? So now you have a range. So let me go ahead and do this. So small time from which is the 1, you have a drive, which is this. You now have a range, which is this. What's next? Liquidity, right? So if you were to grab liquidity, where could that be? Usually at the next minor support or major support, which is like this. So if you were to come down, like let's say you were to come down, right? If you were to come down, you know for a fact you can't take sells there just yet, because at any given point you can literally come down, break the lows, and close bullish back above it or respecting it. And if this were to happen, the moment you see this candle close like this after grabbing liquidity like that, you know for a fact this is not going to continue back up to retest the highs. So then therefore your entries could then be here up to retesting the highs. So that's why I'm saying, like right now you don't have liquidity, and obviously liquidity could be anywhere. Liquidity can actually be up here first and then it can actually come down. If that happens, then you know what to do. Sells down to retest the lows, right? And then you can take sells from here on out. But until you actually have those highs that are being broken, you don't have liquidity yet. So right now, that's what I'm saying. Like you're not gonna have any type of direction until that actually prints. Like earlier on, I said how there's like 2 levels. Like that was like the 5-minute liquidity levels, right? That's why I didn't expect to drive on a higher time frame, but on small time frame, it was driving. Now you're looking at the 1 hour time frame. You need to see a tap into like here, into these zones here, or you need to see a tap into here before you see an actual movement on price. So the 5 did it already, right? Going back to the 5-minute example earlier, the 5 or the 15, I think it was, you did it. Look what you had. It looks a little different here, right? But same thing, chat. What'd you have here? You had a drive, and then what'd you have? You have a range. This is your range right now, right? And then you can say this would have been your liquidity, right? And then as it closes back to the ranges, what happens now on this candle? It's now popping up. So on the 5-minute time frame, you'll likely see this candle drive, which it did, right? I don't know what's gonna happen here because it's tapping resistance now. But like on a higher time frame, if you can see this on the higher time frame being printed like at the daily and the 4, now you have an idea of what can happen next on the higher time frame, which means that you have much more range to trade that day. So let's say this is like the weekly time frame, for instance. The weekly candle then closed like this as support. The next week you're looking to expect this. So then that week you're looking for just buys, right? And you go on a small time frame and you do the exact same thing, just on a small time frame now. And then that's kind of how you figure out what type of market condition we're in, and then taking trades with that condition. So that's the playbook, chat. Like it's gonna really, like it's really gonna help you figure that out, and then show you what steps to take in what different cycles that we may have